Welcome everyone to today's Financial Reports webinar. The webinar is designed to explain the format and use of financial reports and is a collaboration between Regional Development Australia and the Small Business Financial Counselling Program. So this webinar series is a collaboration between Regional Development Australia and the Small Business Financial Counselling Program. Regional Development Australia, known as RDA, is an Australian government initiative that brings together all levels of government to enhance the development of Australia's regions. A national network of RDA committees has been established to achieve this objective. Small businesses around Australia can access individual support to grow their digital capabilities through ASBAS digital solutions. The program offers small businesses low-cost, high-quality advice on a range of digital solutions to meet their business needs. Digital advisory services include webinars, websites and selling online, social media and digital marketing, using small business software, online security and data privacy. The Small Business Financial Counselling Program is delivered by the Rural Financial Counselling Service Southern Queensland. The primary role of the Small Business Financial Counselling Program is to support small business who are experiencing hardship associated with the long-standing drought conditions or the impacts of COVID-19 and have no alternative source of impartial support. The support is free financial counselling. The Australian and Queensland governments provide funding to deliver the program. Hi, my name is Sharon Kingston. I'm a financial counsellor with RFC SSQ and I'm based in the Rockhampton, Livingston, Gladstone, Banana and Central Highlands area. We have counsellors across the southern Queensland. Our role is to educate, enable and empower business owners. Contact details are there on the screen. Please do not hesitate to contact me and I can put you in touch with your local counsellor. We encourage you to ask questions during the webinar. Send your questions using the chat icon at the bottom of your screen. Type your question, please be as detailed as possible, and we'll be monitoring and answering the questions as we go. Should you have any questions after the webinar, please do not hesitate to contact our service. Financial statements offer a window into the health of a business. Understanding the financial health of your business is vital to identify opportunities, avoid risks, and make strategic decisions. Having a good knowledge of your business enables you to grasp opportunities and limit threats easily. There are a number of items found on the accountant prepared financial statements, the core of which would be your balance sheet, your profit and loss statement, your cash flow statement, and the annual report. So a balance sheet shows what a business is worth. It shows the assets, liabilities and owner's equity of a business, what the business owns, what it owes and its investments. An asset, found at the top, up here, is anything of value or a resource of value that can be converted into cash. For example, your current assets generally include things that are easily to liquefy into cash, like your cash at bank, which is already cash, your debtors or accounts receivable, people who owe you money, etc. Your non-current assets take a little longer to turn into cash. You would have to sell them, for example. A liability is something a person or company owes, usually a sum of money. The liabilities are shown over here. You'll have things like GST payable, what you owe in GST, loans, creditors or people who you owe money to. Owner's equity refers to the net worth of a company. It's the amount of money that will be left if all assets were sold and all liabilities paid. So you see here, the asset total is 157,287. your current liabilities is your total liabilities is 47,355. Your equity 109,932. When you add the liabilities and your equity together, you'll get the same as your assets. Comparable periods up here gives us an indication of the changes and how the business is going compared to previous years, months, or periods. Your profit and loss statement. A profit and loss statement summarises the income, profit, expenses and losses for a given time period. The statement can be used to compare time periods and analyse financial trends. It gives a basic flow of how the business is going, and amounts reported are GST exclusive. So at the top here, you have your income. It shows your source of income. You can split this into as many categories as you like. The sales amount over here includes accounts receivable. So they're included in this amount. Your cost of goods down here, it's in relation to your stock purchases, or say if you're a plumber, the items you would use for a job like pipes and fittings, etc. So that is included in your cost of goods. Your operating expenses, this is where your money has gone. This can be as comprehensive as you wish and depends on how you are coding it in your cash book. So see here, for example, you've got motor vehicle fuel, registration, insurance, etc., or you could just have that as motor vehicle. It's up to how you best want to read your financials. And these amounts include money you owe. And the depreciation is also included in here. And this often differs from what's on the business schedule of your tax return. The amount showing in your profit and loss is considered to be your accounting depreciation, which is more in line with the effective life of the asset, where the amount on your tax return is tax depreciation, which takes into account incentives like the instant asset write-off that's currently in place, I think till December, but check that with your accountant. Down below, we have the other income, which would include things that aren't part of your sales. So they'd be things like interest, and of course for 2020, JobKeeper and the cash flow boost. So that's income that's not related to your sales or services. The cash flow statement. A cash flow statement is a detailed indication of the movement of cash during a specified time period. It reflects the business ability to generate cash. The cash flow statement is broken into three sections: the operating, the investing, and the financing. So here at the top, you have your operating activities. This includes money paid out or received that has impacted your bank statement. It actually has gone in or come out of your bank statement. Adjustments are made for non-cash items, for example, depreciation, accounts payable and accounts receivable. And so that includes people who you owe money to, or people who owe you money are taken out of this equation. The investing activities, that's anything that involves the purchase or sale of an asset, property, plant or equipment. Money spent to grow or maintain the business. So the sale of an asset will show as a positive because that's money coming in, and the purchase of an asset would be a negative. That's money going out. Then we have the financing activities, which are things like loans, a positive cash flow because that is money in your bank account. And deductions would be things like dividends paid out or principal repayments on debts, etc. The difference between the cash flow statement and the profit and loss: the profit indicates the amount of money left after all expenses have been paid, while the cash flow indicates the net flow of actual cash on the bank statement in and out of the business for the period. An annual report. An annual report describes the operation of a business and its financial conditions. Annual reports are wider in scope than financial statements and often include articles and summaries incorporating images, graphics and correspondence from the CEO to describe activities and achievements. The annual report gives insight into a business's goals and future plans and strategies. It includes the business's balance sheet, profit and loss statement and cash flow statement. Of course, annual reports differ for large companies to mum and dad companies, but each briefly outline the direction of the business. Taking the time to review and understand these valuable financial documents provides insight into your business, including your debts and your ability to repay them, how a business is travelling, whether profit or loss has increased or decreased. You can draw information on, why sales have been increased. Perhaps it's because your advertising expenses have also increased.
I've got a question here, Sharon.
Yes.
So the question is, how often should you do all of these reports? Obviously, the annual report would be annually, but should you do them more often than that, or is annually enough?
Oh, no, it's certainly a good idea to keep across your business by having an understanding of what's going on. Whenever you reconcile your accounts, which is at least monthly for most businesses, then you can have a quick health check of your business, how you're travelling, what's going on. Are there expenses there that you hadn't thought should be that much? You can check into them there and then, and it's more relevant than waiting for the annual report.
And there is another question here. My accountant usually does these reports for me. Is that enough, or should I be doing them myself?
It's a great idea to keep in touch with your business, getting your head around cash books, etc. That's what we're there. Our role as financial counsellors is there to assist you with that, to look into and understand. And we can certainly assist you in getting a handle on where to find things and how to look up things. Is there any other questions, Sharon?
Not at this stage.
Okay, the role of the Small Business Financial Counselling Program, as I just mentioned, we're there to assist you with anything. Feel free to touch base in relation to your business, and we can certainly do our best to help you. We support and assist small and medium businesses who are experiencing financial hardship. This year, we've been involved in tenancy agreements and negotiations using the Mandatory Code of Conduct and the associated regulation, loan application supports, grant and funding application assistance. Our mission is to assist people to identify ways to become self-reliant and better equipped to manage change and adjustment. Give us a call and let us help you. The role of the ASBAS Digital Solutions Program, who are working in conjunction with us with this series of webinars. The ASBAS program provides high quality, low cost, government subsidised one-on-one advisory services, workshops and webinars on a wide range of digital topics that fall into the 4 main priority areas of websites and online selling, social media and digital marketing, using small business software, and online security and data privacy. All big things in today's market. Services are being expanded to cover general business advisory topics of business crisis management and business continuity planning, finance management and boosting cash flow, staff management and creating a safe work environment, retaining and staying connected to customers, resilience and well-being, that's a good one, COVID-19 stimulus packages for small business. So how to contact the Small Business Financial Counselling Program? We can be contacted on 1300 732 777 or www.rfcssq.org.au. Regional Development Australia on 0407 116 749 or www.asbas.rdabrisbane.org.au. So, sorry, I'm just trying to turn on my video. So we'll be waiting online should you have any further questions. Feel free to send questions into our service and someone will contact you with an answer. I do hope you enjoyed the webinar and please feel free to contact us at any time. Thank you and have an awesome day.